Okay, guys, so I wanted to show you the importance of top down analysis. You need to know your top down analysis. Before you go into a trade, you need top down analysis. It's going to help you a lot. And that is one thing that most traders fail to do. They fail to have their top down analysis, so they enter the market blindfolded, right? So, this is just something I want us to look at to help us in our trading journey, right? So let me take you to the chart real quick so that we see one or two stuff. So here on the chart, we have Euro USD, right, for our time frame. I think this is 4th September, right? So market is choppy, right? But then market is in a range. This is the price range from this area, this to this, right? This is the price leg. Market is ranging, right? Market is ranging in this price leg, right? So we are expecting markets to either move to break or move and break below, right? So, but when you are looking from this side, you see the market is what in a downtrend, right? Market is in a downtrend because markets broke this low, right? So just let's not go far back. Let's not go far back, right? So we are just saying that market is in the downtrend, broke the structure to the down, and now we have this other block here, this demand zone here, right? So we are anticipating the market should move to our demand zone and then retrace, right? Retrace back down. So on our 4-hour time frame, we have this, point of interest up here, and then we have also another demand zone down here. So there's our supply and there's our demand. We have another demand zone down here, right? So we are anticipating the market should come down and then take the buy to our point of interest, right? Before we that sell or see what market has for us, right? So on our 4-hour time frame, we have this as our mindset. Market is currently ranging, and we don't really like to trade ranging markets. But no, this is 4-hour. So when you move to the down or the lower time frames, you are going to realize that these are trends. These are massive trends when for those who trade, intraday. Like these are massive trends. So when we drop to our 1-hour time frame, we have this, right? We have liquidity, and then we have imbalance, and then we have our demand zone, right? We have our demand zone, refine it nicely, and then when we refine this too, we have a nice demand zone. We have a massive imbalance here, and then we have this nice breaker block from the side. We have a nice breaker block that's leading all the way. So we have our zones here that we are anticipating the market could reverse from and trade into our point of interest, right? So we are going to wait and see whether the market would play in our favor, because the market is telling a story. So we are just trading the story, or we are just moving with the story. So if we play our charts, let me just increase this a little. We realize the market is just playing around, right? So market doesn't actually come into our point of interest, but market didn't come into our zone, but then went straight into our point of interest, sweeping this liquidity, right? Straight into our point of interest. So we can see the market was broke structure here, right? And then left a nice demand zone. And then when you look at this, you realize that this is relative equal lows here, right? Relative equal lows. So we have also another demand zone, right? So we are going to take the trade. We are going to take the sell. Market is currently in our zone, so we are waiting for the sell, or we are waiting for the confirmation to trade into any of this and then take the buy up, right? Others would like to just set limit orders, and then trade down to this, right? But then this is what a 1:2. It gives you a bigger stop loss, space. It gives you a bigger stop loss space, right? But if you wait for, let me say, if you wait for a confirmation entry, market is going to actually, give you a smaller stop loss space, right? So we just move down to our 15 minutes. We just move down to our 15 minutes to see whether we are going to have a change of character, right? So we watch market. Market is doing its thing. Market has broken structure, right? Market has broken structure nicely. So I like to wait for two break of structures. I don't really like to wait for, just take my trade on the first break of structure. I like to wait for two break of structures. All right, let me just reduce this a little. So we have this, right? So market is trending, market hasn't come. So now market is coming. So probably people would like to take trade from here because they fear the market might not come to their zone. Me, I like to take the first supply and then trade. So I'll place my entry here and then my stop loss just above this and then my take profits. So now I have a 1:6 instead of a 1:2, right? So we wait to see if trade is going to come our way. If it doesn't come our way, fine. If it comes our way, we are good, right? So market taps into our zone, so now we've hit stop loss, right? We've hit stop loss, and it's part. The reason why I'm showing you this is that you need to know what you are doing. You don't just go into the trade and then always hope for something better, right? You need to know what you are doing. So market has hit our stop loss. We are still playing market to see what would happen, right? So market has what broken structure to the top, right? So we delete this, and now we are waiting to see if you have any confirmation entry to take the trade down, right? Markets. So finally, markets broke, right? Markets has broken structure. So I would also still like to take trade from the highest points. But I see after this, people say there's a breaker block, so they would want to take their trade from this. But then I still like to wait because you need to manage your risk and also take reasonable trades. You don't just take any trade. And most people try to revenge trade because market didn't, market hit their stop loss. So they would want to take a revenge trade. So now markets are stabbed into our zone. Market is moving smoothly and markets is moving smoothly. So here you can trade your stop loss, right? And finally, markets hit TP. See how nice and gentle markets moved. So now after taking a stop loss, we've what hit TP. 1:7, right? That's 1:7. Nice trade. 1:7. You get it? And that's the benefit of doing a top down analysis. So now we know that market has come into our zone. But I told you something. I was like, this was relative equal lows, right? Relative equal lows. So we have two zones here that we are expecting market to retrace from. So I can wait for a confirmation entry here and then set a buy limit from the zone and then target the high, right? I can set a buy limit, place my SL just below this to keep me safe, right? Just below this to keep me safe so that I don't hit stop loss, right? So now I know the market is going to go up. I'm waiting for a retracement. I was waiting for market to come into my zone and then take it up. But then I was able to take advantage of what the retracement that came down, right? So we are just going to wait, play this, and see what market is going to do, right? So we can take trade if this gives us a confirmation. If not, we are just going to wait. So this is our first, break. We are waiting for the second. This the second. If this gives us a second break, fine. If it doesn't, then we are good. You see, market is coming down. Market is coming down. Market just tapped into our trade, our order, and see, market is just flying. market is just flying. And that's the beauty of top-down analysis. That's the beauty of top-down analysis. If you do your top-down analysis correctly, you are always going to get the best entries. If you don't do it well, you are not going to get it. So that's all I can say. You can take your profit here, or you can wait, right, for market to get to your TP. See, market just nicely moved and straight to TP. Right, market has come to our TP, straight to TP. And that's the beauty of trading. That's the beauty of trading. That is the beauty of trading. So please always do top-down analysis. It's going to help you, because see, with top-down analysis, now we're able to take this retracement and then take the buy also. And that's the beauty of top-down analysis. Because on a higher time frame, we knew the market was coming, we were anticipating the market was coming to the zone, right? And markets perfectly went into that zone, broke structure to that zone, took the sell. Whilst market was going, it gave us, nice areas of interest that we could say the market would retrace from. And nicely, it gave us those movements. So we need to do our top-down analysis nicely. And when you do that, you're going to win most of your trades. You're going to win most of your trades. You're not going to, be chasing trades left and right, because you want the market to get into your side where you want it to get to. The market is telling the story, so you want to move along with the story. You don't want to make your own story inside the story of the market. Okay, so please don't forget to like, don't forget to subscribe, don't forget to comment, don't forget to share, so that others can also benefit from what you are benefiting from. See you in the next video. Stay blessed. Always remember, discipline over hype.